Hi, everybody. Hope you're doing well. Hope you had a great Thanksgiving. Today, we're going to cover the QQQ ETF guidance for November 30th. For the sake of brevity, we're just going to call it the Qs. And just a note, we're going to start covering SPY guidance next week, so look out for that. If you like our content, please subscribe and hit the like button. So let's just jump into what the Qs are going to do next week and over the next 30 days. So what's the net? So we feel that next week it's going to bounce between 1 and -1% and +1%. It's pretty vague, but the reality is that with all the news, the macroeconomic conditions, some settling around the election, you could expect good news and bad news throughout the week that's going to impact the Qs, mostly for the following reasons. Macro conditions, December slowdown, and the Qs are 1.3% from an all-time high. It's not going to break through in December, we feel, certainly based upon the traditional December slowdown. Q4 growth is huge expectations for the companies that make up the Qs, and we'll cover that in detail in a little bit. So they're kind of gearing up, I think, for 2021. So I don't think there's going to be a breakthrough, or at least the data that Prep to Grow analyzes shows that there's going to be a breakthrough just with all these conditions going on. However, they're good signs for 2021. There's less volatility. Things are starting to stabilize from the bounciness we've seen. Fourth quarter growth looks pretty phenomenal, continues to look phenomenal. It doesn't seem like there's anything that's going to hurt this at this point, especially with 1 month to go into the quarter. And again, we'll cover that in detail. So we feel with those things, it's going to stay between -1 and +1% bounce throughout the week. It'll probably start off a little bit flat and then bounce around as the week progresses, especially as more macro conditions start to get announced. For the sake of the channel, we can't actually mention things like shutdowns and that kind of stuff. We tend to get, those videos tend to get banned. So we can't even talk about that stuff. So I'd like to use those words in more specifics, but we just can't. So apologize for the vagueness when we say macro conditions. So let's jump into companies that are announcing this week. So Zoom, it's a big one. It's the poster child for the stay-at-home stocks. There's been some pullback in Q3, but it's starting to accelerate through Q4. We think future growth looks pretty good. It'll be up about 1%. The analysts have very, very high expectations as they went through Q3. Just note, this data is for Q3, right? This isn't what's currently happening. You know, their announcement is based on Q3. So we're going to talk about Q3. We'll talk a little bit about Q4, but just for baseline, this data is for Q3. During the month of volume, during the Q3 period, their volume decreased 31%. Prep to Grow had about an 80% accuracy. It's a little bit low on what we would want to make like a solid call on accuracy on Zoom. Usually we expect 90% to make a very definitive recommendation on what to do, but we don't have that accuracy for this. The other is that during Q3, the stock increased 30%. So for Q4, it's certainly a different story. Stock has dropped. Analyst expectations have dropped by 14%. Volume, however, is up 64% from Q3 end. So there's some mixed expectations for their Q4. We see them ramping up. I think the Zoom or the data shows that Zoom probably got too hot and had to cool off. And now the Zoom growth as a company is catching up to some of where the expectations are. And you can kind of see that in the curve with the blue line going up and the green line going down. The stock got too hot based upon where the growth was for Zoom, and there was a pullback. Now Zoom is ramping up, and we think when there's that kind of separation between the blue and the green line that the stock should increase. So our expectation is that they'll probably have a solid Q3. Q4 looks good. They'll continue the growth, and they should have a solid Q4. Let's jump into Synopsys, the other one announcing next week. This is a low announcement period for this week, so there's only these two that are really the biggies that are announcing. Synopsys, if you've ever worked in the high-tech industry or even chip design, they're viewed as kind of the backbone of this. They do design and testing software for integrated circuits. Again, the backbone of how do you do that stuff. not a terribly interesting or fascinating company like a Zoom or Google, more core back end. So it wouldn't be surprising if nobody's heard of them before if you haven't been in the high-tech industry. We expect they're going to go down. Analysts expected that they're going to go up. The volume decreased in Q3 by 17%. Our accuracy for Synopsys in getting stock predictions correct is 67%. Again, Prep to Grow predicts company performance that has a tie-in or correlation into stock growth. For 67%, which is very low for us, but we're just bringing this up as a company that's announcing it this way. So you got, 2/3 of a chance if you go with our recommendation, but 67% is low for Prep to go to make a solid recommendation. In Q3, their stock increased by 22%. This is their fiscal year end announcement. So coming out of Q4, they've had some growth coming out of Q4 and into Q1, but the impression is it's too late to do much in Q3. They've had some pullbacks. The analysts coming out of Q4 going to Q1 have dropped their expectations by 15%. So essentially the baseline is they came into Q4. So if we look at that green and blue line, that's the opposite of Zoom. So we expect that their price is going to decrease. There is some usual option activity within this. People have put a bet on a put for this, and that happened on Friday, November 23rd. But mostly other than that, they haven't had any unusual option activity. So, which is not unusual for a company like Synopsys. So that's where that. We think they're going to have an okay Q3. They're probably going to Q4. They're going to announce higher expectations into Q1, but it's a pretty boring company. So chances are it's going to be a boring announcement. Let's go to important earnings next week. This is where it gets more interesting. Adobe's announcing, which is always a great company, and Broadcom is announcing as well. Adobe, based on our data, they've had a rough Q3. They've done a bunch of pullbacks and then have accelerated their growth in Q4. So it's kind of shady on how, not shady, but kind of interesting how we expect them going to do in Q3. Broadcom, growth in Q4, kind of flat growth in Q3. So we'll have more details on it next week. If we look at unusual option activity for the week, Tesla, huge bets on it pulling back for the February-March 19th, 2021 expiration date at the range from 510 to 570 strike price. People probably following it up as it climbs ever higher. It varies from a 1.6 to a 14.3 volume to open interest ratio, and it was roughly $87 million in trades for Tesla. So a lot of bets on it pulling back. Not a lot of bets on calls for them, but a lot of bets on puts. Charter, same thing, more specifically for January 15th, 2020 expiration date at the 605 strike price at a 10.3 volume to open interest rate ratio, 2.5 million costs, and this occurred on the 23rd. Someone's putting a bet that a short-term bet that Charter will pull back. Let's jump into the 30-day predictions. If we look at the analyst expectations of the next 30 days and our expectations, you can see why we separate out FAANGs from non-FAANGs. So FAANGs are 15 companies that make up 64% of the total Q holdings. I mean, there's just a world of difference. The expectations 5x in revenue, 2x in earnings per share, just a big difference. However, both sets of companies are expected to have a very high Q4. In fact, these numbers are, I believe, the highest for the entire year. In the last 4 weeks, they've increased expectations by at least 20%. So big expectations for FAANGs and for non-FAANGs, and this is supported by the data and what we've been talking about for the last couple of weeks, that the Qs are going to have just a phenomenal growth in Q4 with a month left to go. January 2021, I'd start making some interesting bets on calls and growth within the Qs if all conditions today stay the same. If we look at the short term, so through 30 days coming into December with traditional pullback, we're predicting more puts than calls. December pullback, some macro conditions, that kind of stuff. So we think December is going to be a bit of a pullback near the all-time high and with such high growth expectations next year. Historically, you see about a 4 to 5% pullback when those kind of conditions are met. So we believe that it may happen. We give it a better than 50% chance that there'll be a 4 to 5% pullback in the Qs within the next 30 days. If we look at the option volume for our prediction, same thing. Predicting and the volume is more centered towards puts than calls. Again, with the trend of December and the pullback before the growth in January. Predict the stock price. It's the same thing, the FAANGs versus non-FAANGs. Certainly non-FAANGs much more stable, right, than the FAANGs. The FAANGs have been up and down. The Facebooks, the Googles, the AMDs, they've been bouncing all over the place over the last weeks. The non-FAANGs have been very stable in terms of their growth and their predictions, and we'll have a rise through December more so than the FAANGs. But it doesn't really matter at the end of the day because the FAANGs, or the 15 companies that participate in that, make up 64% of the Q's holdings. So that's why we feel there's going to be a bit of pullback. So the net for the week is that we believe the Qs are going to bounce around a lot, -1 to +1%. We feel that, or the data shows that there will be some form of small pullback in December. But January of 2021, the growth predictions, ours and other analysts, are that it's going to just go skywards. So I would avoid maybe short-term calls in December, but look at longer-term calls at the beginning of the year. So that's what we have for the Qs. People have asked for this, so just how do we come up with the analysis for Prep to Grow? We track 94% of the total fund, or the companies that make up the fund. We've been tracking companies that are participate in the Q since 2012. We primarily only track U.S. or European companies of the Qs. We have a 1 to 90 day time horizon. We look at companies' forward-looking performance that has a correlation to stock and option price. We start with that first. We don't predict stock prices. We predict performance that has an impact on stock price. So it's a subtle difference, but it's a big difference in how we look at the stock market. And in this day and age, you can't do this kind of analysis without big data and AI technologies. We make thousands of recommendations and predictions a day. We look at millions of data points. It's too much information for any group of humans to look at. So that's why technology we use to do that analysis. And we only look at primarily companies that we have 80% accuracy in. However, we will lower that for earnings analysis for companies. Well, we appreciate your time, and we hope you have a great week of trading, and happy trading.